All right, for this special 2025 in review and 2026 preview, say that 3 times fast, we're going to go through what happened at the beginning of this year. In fact, there was a lot of predictions, as there are every year. We're coming up on prediction season. In the next week or two, you'll start seeing mostly mainstream financial press talking about what the analysts think, what the billionaires think, what lowly investors think. You're going to have conferences, big tech conferences, CES, big healthcare conferences in JP Morgan. That's going to set the tone for the year. But I'm here to warn you to put too much credence in any of these headlines. In other words, don't be scared stockless, because let's rewind a little. And this is how Reuters started off the top of this year with their poll of equity analysts saying, hey, guys, global stocks not going to do so hot. They're going to have tempered gains in 2025. And let's see, what does tempered mean? Well, maybe around average or below average. Well, the average for S&P 500 is around 8 to 9% a year. And guess what? We had double that. So if you listen to the equity analyst poll from Reuters, you got screwed. You got scared out of stocks. But if we go down the list and we look at very well-known research shops and the headlines coming out of them, they said a recession is imminent and that our favored tech stocks were going to get absolutely crushed this year. So recession imminent, tech was out. Guess what, folks? We got none of the above there either. But what about the billionaires? They're the smartest guys. They made billions making big market calls. And, well, I got to tell you, at the top of this year, they were pretty pessimistic as well. You had billionaire Ray Dalio warning that we're going to have an economic heart attack in America if we don't radically reduce our deficit. Well, I'm just checking. It's December 15th. We haven't done squat on reducing that deficit, and we have not had an economic heart attack. Well, what about Jeremy Grantham, another famous billionaire prognosticator? I don't know. What did he have to say? Well, he told Guru Focus that we're going to have a super bubble risk this year. No, folks, we have not had any of that. Yeah, there's a lot of talk about an AI bubble, but we're actually not in one no matter what metric you look at. So what's the point? Ignore the headlines. Don't give them any credence. Don't be scared stockless, because if we look at the data, you see, well, look, even ignore the headlines mid-year. Peter Schiff here saying in the middle of a bull market that it's really a bear market rally. I don't even know what that means. I don't think Peter knows what it means. He just has 2 settings: be bearish and buy gold. That's it. That's Peter's go-to recommendations in the market. But what about, so predictions are worthless. Feelings aren't that important either. They don't really matter. We need to stick to the facts, and the facts underscore that there was plenty to be bullish about this year. In fact, remember, we showed you anything but the USA was a trade, and that was a bullshit. Yes, it was bullshit. Nothing but a bullshit. Dan the man, a little slow on the trigger today, but you remember we were being told in March and April this year to just get out of everything in the U.S., and we pointed to the facts. The facts underscore the fact that, no pun intended, 12-month forward earnings projections for U.S.-based stocks were much higher than the rest of the world. I mean, you look at it here, you're getting 400% plus projections moving forward as we go into 2025. And the reality was, you really could make any prediction that was bullish this year, and you would have been right. I mean, just look at this list here of the top performing investments of 2025. Nowhere to hide. I mean, look in the sectors, right? Tech is up, communication services. You go down the list, the only thing that was barely budged was real estate, but everyone knew that. No one was expecting to make a fortune again in real estate. But the overall S&P 500 as of today is up 16% on the year. So much for tempered returns. But here's this week's money chart. You didn't have to go anywhere far, but the winner this year for the best performance was gold. Gold mining stocks, in fact. You see, they're levered to the price of gold, and gold had a historic run this year. But I don't know. I'm not mad that I don't own much gold. If you looked at all the best performers that were elsewhere, you had semiconductor stocks up 60%. You had biotech rebounding up 30%, depending on which index. You had small caps even finding their footing again. And so, folks, the takeaway is really simple. Cybersecurity, IPOs did okay. Thing that shocked a little bit, a lot, Bitcoin. The worst performer for all the assets we track this year, actually down on the year going into the last 2 weeks based upon the recent pullback. So my point is this: there's always a bull market somewhere, and we're always going to be looking for that bull market. We're not built to be pessimists here. We're built to be optimists. And I don't know, I haven't really met any billionaire pessimists. Even Ray Dalio was optimistic in certain points, and Jeremy Grantham, that's how they made their money. So, folks, we're always going to lean towards where opportunity lies and find that for you, and those are the facts. We don't focus on predictions. We don't focus on our feelings. We just find the data that leads us to the winning investments. And